Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing, and we're seeing mostly higher prices except for some of the live cattle contracts. And DuWayne, grains to the plus side again, wheat kind of the undoubted leader. And how much of this is putting a little war premium back into this market?
I think that's what a lot of it is. Over the weekend, I think a lot of us assume Russia, Ukraine would probably come to some resolution, extend the grain deal, maybe another 2 months or something like that. The Black Sea corridor is what I'm talking about. But no deal struck and no meeting set for this week. So essentially, you could say the Black Sea is shut down from Ukraine shipments right now. And with the funds being massively short the wheat complex, I think this morning a lot of them said, I don't know if that's a bullish thing or not, but they didn't want to be short anymore. So you've got the wheat leading the grain complex today, which is something I don't often say.
Yeah, and it's obviously getting folks a little bit nervous there, but we're also seeing a little bit of hangover here, actually maybe a good hangover from some bullish numbers in terms of winter wheat production. Abandonment numbers were higher than expected. And then we got the Kansas wheat tour, which may confirm that this week, right?
Yeah, it should. I think about a week ago when we had rains in the Southern Plains and we saw the crop ratings still not improve in the Southern Plains for the winter wheat. That's when we found out, well, this crop is in big trouble. And seeing some of those pictures from the Kansas wheat tour already, or at least maybe private ones going around, it does look tough. It looks very short. You can see the rows easily. It never filled. So yeah, like you said, bullish report last week for wheat, which is fun to say as well. And yeah, maybe a little bit of continued buying from that, which is good to see that confirmation after a sharp up day on Friday. So wheat market it looks really good. Supply and demand wise in the U.S., it's tight. Global stocks are still decent, but I don't know if the wheat complex is strong enough to lean corn and soybeans out of the doldrums here, but I guess we'll watch and see.
Yeah, well, so far it's doing it today. I got to ask you technically, though, especially when you look at HRW wheat, which has been the leader, we finally got above that $9 mark. We kind of need to close there above that level in the July here to keep this thing going, don't we?
It would sure be nice. I mean, getting above 9 was a very big deal for July Kansas City wheat. And like you said, we close here. It actually looks like this market is not only just broken the downward trend, but is making a newer high than we've seen since last November. Which, you go back, we built this big war premium in last year. We took it all away and then some. And the war's still going on, isn't it? And now all of a sudden, Black Sea might be shut down. So why shouldn't the wheat market rally quite a bit? Especially when you mix in, like I said, maybe the most important thing is how short the funds are of this market. Do they really want to be short wheat right now after USDA's report and an ongoing war in Russia, Ukraine? I really don't think so, or at least not massively short anyway.
Yeah, and I want to add on top of that, we have spring wheat acres in the Dakotas and Minnesota that may not get planted.
Yeah, for sure. What you're going to find in this afternoon's crop progress report is that North Dakota didn't have much progress of much of anything last week again. Now, that being said, it's getting really late for the spring wheat, but the weather is decent this week. A lot of guys just starting from my area, Northeast South Dakota North, getting out in the fields this week. They'll hit it hard and they can get a lot of wheat planted in a hurry up around the Grand Forks area. It looks like they missed the rains a little bit, so they'll be going hard already. But yeah, that report this afternoon is going to show North Dakota's way behind and should give some premium to the spring wheat market as well.
So you kind of alluded to it. Corn is a follower of wheat. Is that the only thing that's supporting the corn market today?
Usually when I see the corn market up 7 to 8, I've got some bullish news to tell you and a story, but that really does seem like a follower. And believe it or not, the corn market still looks a little heavy today to me. If it wasn't for wheat being up about 30 cents right now, I don't know if corn would be even trading higher. When it comes to December corn right now, USDA gave us a bearish outlook on Friday, and the funds are short, 100,000 contracts. Right. You might see some end users stepping in, buying some old crop here, and maybe even starting to buy a little bit of new crop. But overall, it's still a bearish picture, and I'm worried those funds go from short 100,000 to maybe 300,000 if the weather forecast looks good. South Dakota got a lot of corn planted last week. You'll see that this afternoon. But North Dakota, will be behind, but that'll be the question moving forward for the next 2 weeks is will there be prevent plant in North Dakota? And there sure will be. Maybe not as huge, burdensome acres as I was thinking a month or two ago, but probably still worse than the trade estimate is right now. So that could be a story that could bring corn up a little bit, but you won't get confirmation of that until June 30th, Michelle. So I don't think the market gets too excited about it.
Right. We still have the inverses working. You've got the bull spreads working. How long does that hold together, do you think, DuWayne?
I hope until I sell the rest of my old crop corn.
Okay, sure.
So
That's a great answer.
yeah, like every producer, we're hoping
Yeah.
for a little bit more of a pop. But honestly, we were right at $6 here today in July corn, and that's some resistance points there. We've pulled back already. I think anything over 6, farmers got to look at some ways to probably get rid of their old crop corn. 6 on the board, of course. Everyone's basis is a little different. That inverse probably stays for a couple more months though, Michelle, because remember, our old crop stocks are still tight. Yes, export demand has been dreary and ethanol demand hasn't been the best, but we're not even in the prime driving season yet. It's still a tight situation out there. Go ask some elevators how much corn farmers have sold the last couple of weeks, and I bet you it's not much of anything.
Yeah, but they're in the field, so maybe that's the other reason why.
Right.
But to your point, July corn futures $6. That's been a tough resistance area that we've got to get above here to keep that thing going. Soybeans, the inverses are working there as well. The bull spreads are still working, so we have this 2 crop situation, tight old crop, and then trying to transition into this bigger new crop, aren't we?
Yeah, we sure are. It wasn't a great report for soybeans either. New crop ending stock
No.
closer to 350 million, where the trade thought it would be just south of 300 actually. But we got to remember, 350 million still isn't a huge abundance amount of soybeans either. And the old crop situation is very tight there. The problem is demand is close to non-existent on the export market moving forward with Brazil's big crop. But I did read over the weekend that Brazil's cash price is maybe finally peaked and starting to drip back a little bit now that harvest is complete, or increased just a little bit. So that'll help competing against us. And their prices later this summer are sharply lower than they are right now. So it's kind of they're trying to get their beans right now from their farmers, and then later on their prices come back, and it should be competitive with us at least. So maybe we can find some export demand. Crush demand should be very good. I think we've got an open crush later this afternoon or on Tuesday. 174 million bushels estimated. That'd be a nice number if we can see that.
Yeah, that would be a record. We also have soybean meal up, soybean oil both up. Maybe they're both anticipating that strong NOPA crush figure, you think?
Yeah, probably. It was really nice to see soybean meal last week kind of rebound quickly. Argentina's crop is a disaster. There's no doubt. We had better exports last week for soybean meal, and then a flash sale, I think it was this morning, for soybean meal as well. So it's good to see. Trade action isn't the best in meal today. We started off pretty hot and heavy. Now we're kind of back to around unchanged, so we're well off the highs. But yeah, for raw soybeans to rally here, we're going to need the soybean meal market to lead it for sure.
Yeah, and we got that pop. That was interesting to see Poland come in for some soybean meal. I don't know that I've seen that before. Cattle market, what do you think there? WASDE was positive. We had higher weekly closes last week. Is this market just kind of doing a back and fill till we get cash trade direction, or what?
Yeah, I like that back and fill type action. We started higher right away this morning. Looked like a strong market, maybe a little bit of, like you said, the positive hangover from the USDA report. Production down sharply. Demand, consumption down as well, but still ending stocks sharply lower. So that's good to see for USDA, but that's just a report. That's just paper. Last week, slaughter was very high at, what was it, 646,000. So slaughter numbers stay high, weights are low. So still a bullish market, but market feels a little tired to me. The funds got out of a few positions last week, and seeing the hogs rallying sharply against the cattle market actually turning a little negative now makes me think that maybe traders are a little bit tired of the bullish cattle story and maybe thinking hogs are at a bottom. Maybe you've got some cattle spread, hog unwinding there, some spread unwinding. So we'll see. It looks a little heavy to me right now, the cattle market.
Yeah, and hogs, is that just short covering, you think, DuWayne, or not?
I think so for now, but up 250 on the day, that looks more than just short covering. It looks very strong. We had the Prop 12 California story last week, a lot of uncertainty there, but now it's a time of year where pork cutouts in cash should start rallying about $1 a day, and I just haven't seen it yet, Michelle. Now maybe the futures market knows something I don't, but if I don't see that happening, I'm going to call it just a dead cat bounce for now.
Yeah, and actually the WASDE was a little bit, I don't know, neutral probably for 23, maybe even a little bit better though for 24. So I don't know if that's it, or if the fact that the lean hog index has come back up here, maybe that's helping out a little bit today as well. All right. Thanks for joining us. That is DuWayne Bosse with Bolt Marketing. That's Markets Now.